Hello everyone, how's it going? In this video, we're going to be talking about Mullen, trading under the ticker symbol MULN. If you're looking to buy Mullen shares, then please keep watching because we're going to be looking at the company's recent news, the market's reaction, and what are the technicals telling us. As the market remains volatile, especially for Mullen, we should always be mindful of which positions to choose, as well as their individual timing and exposure. Before the video begins, if you would like to see more stock analysis videos like this one, please remember to like, comment, and subscribe to my channel. Over the past trading session, it appears that the share price of Mullen was initially able to bounce back to around 50 cents, which to some extent still gave some small amount of encouragement to retail traders before selling off back to like 45 cents. At this point, I think that the market is almost waiting for Mullen to tip over from Nasdaq to the over-the-counter market, commonly referred to as the pink sheets. September 5th was the last day that Mullen should remain compliant to Nasdaq regarding the minimum share price, and there is no indication that the stock is able to succeed at keeping its place on the exchange. This would also suggest that although Mullen is probably going to go through another round of downward volatilities, it could mean that those who were selling the news would have already sold their shares by then, and the extent of bad news may be on their way out, since the market was assuming that the rest of the participants would go in this direction either way. When we look at several disgraced stocks that have been delisted and sometimes even declared bankrupt, not all of them saw their share price reaching zero. In fact, if anything, Mullen may see a regain in interest for the long positions once everything is said and done. Don't forget that this is a company that now has actual operations, allowing it to generate revenue, even if it is still at an early stage. So, with that being said, let's take a look at the technicals as well. The trading volume of Mullen has recently been around 37 million shares, which can probably be explained by the fact that everyone or most people are waiting for the next step, which is a potential delisting. Over the previous 52 weeks period, the price fluctuated between 39 cents and $178. The market cap of Mullen is currently around $90 million, compared to the enterprise value of $115 million. Now, as we compare the current price to the historical price fluctuations, the stock is 0.4% higher than its 1-month low, 0.4% higher than the 3-month low, and 0.4% higher than the 52 weeks low. On the options market, which often gives us a hint on the market sentiment on where the stock price is probably going to go next, the implied volatility is around 300% versus the historical volatility of 206%. The put-call volume ratio is currently at around 0.36. It's normal for many stocks to also tend to have a higher put option volume than what they deserve, as many long positions are hedged with put options. The most recent volume of options traded has been 18,000 contracts versus the 30-day average of 37,000 contracts. In terms of open interest, the most recent volume of open interest is around 1 million contracts versus the 30-day average of 1.1 million contracts. The options contracts are tools allowing traders to hedge their risk, increasing their exposure with limited downside or a revenue stream. They are derivative contracts based on the underlying security. They give traders the possibility to buy or sell the security at a predetermined strike price and helps limiting the potential downside. The put options allows selling at a strike price, usually chosen for the anticipated downturn, and the call options allow buying at a strike price, usually chosen for the anticipated bullish run. Regarding the shareholder structure, institutional shareholders hold about 10% of the outstanding shares. The biggest shareholders include Fidelity, BlackRock, and Susquehanna. The 10% is probably going to dip once Mullen stops being traded on a Nasdaq. This is just a mechanical rule that many of them have adopted for most other securities. Usually, it is better to see some institutional participation when holding a stock long term because it offers a layer of stability and reliability for the long term, like investment. It doesn't mean that all companies apply to this rule, and it also doesn't mean that a company without any sort of significant institutional participation is not worth to be had. For instance, many of those volatile penny stocks may generate very significant profits if you were entering at the right moment. In this case, then, it wouldn't really matter whether they have a lot of institutional participation, and that is the case for Mullen. The current short interest is around 10% of the total float, 57% of which are coming out from the dark pools. If the short interest is above 15%, then we have a case for short squeeze. It's not the case at the moment. And despite the fact that many people believe that a short squeeze is going to sort everything out, I think that this is a little bit of a wishful thinking for the time being. Generally speaking, in the world of finance, penny stocks like Mullen are a bit unusual and also intriguing at the same time. Those securities are known for being cheap and get a lot of attention from retail traders or regular people like you and I, but they also tend to have very big price swings. Their movements don't often make fundamental sense. At the moment, a bunch of things are affecting the stock market. One important thing is the interest rate. When central banks raise interest rates, it makes it more expensive to borrow money, and that can slow down the spending by regular people and how to invest. For penny stocks, it might mean that people start to expect less from them or to think less of them, and some might even decide to not take these kinds of big risks for the time being, which can explain why penny stocks, especially the really risky ones like Mullen, have been losing value recently. This situation can also lead to prices going up because of inflation. Some people might want to invest in riskier things like penny stocks to try to make more money than what they're losing because of the rising prices. But this might not always work out, and it doesn't have a big impact on where most of the money the market goes to. Big investors usually wait for prices to drop significantly before they start buying again. Also, there's the possibility of a recession, which makes it trickier to decide if it's a good idea right now to buy shares of a company that's supposed to sell EV cars. Well, no longer supposed to, of course, because Mullen actually sells EV cars, even though just a few of them. Unlike other fancy tech companies like Palantir or even what Rework tried to be, Mullen is seen as a company that makes things and sells them to people. They can't really afford to lose money for too long of a time. Plus, if the economy doesn't do well, fewer people might want to buy EV cars, like the ones Mullen makes, because they tend to be more expensive than the regular cars. Then there's the issue of global problems, like conflicts, trade issues, and other uncertainties. These can shake up the financial markets real good. When that happens, investors often look for safe havens to put their money into, like blue chips, commodities, and government bonds, and they tend to avoid companies like Mullen because of their risk profile. All these factors can make penny stocks like Mullen jump around a lot in price and make people uncertain about when or whether they should be buying them. When interest rates go up, investors might get more careful. High inflation can be a chance for some, but a danger for many. And when there's a talk of recession, investors might choose safer things to invest in. It's just logical and part of human nature. Being honest and open about how a company is doing is also really important, especially for penny stocks. And in this aspect, I would say that Mullen isn't really a reference, unfortunately. Smaller companies often don't have the same rules or the company culture to report everything as transparent as the bigger ones or the more established ones do. Investors usually don't want to mess with penny stocks, especially in the long term, because they're not really clear about what's going on, given the fact that they are already risky. Without clearer information, there's a higher chance of scams, trickery, and market manipulation. The company that gives clear and honest information can really make a big difference in how confident investors feel about trading penny stocks like Mullen, which unfortunately, in addition to all the other problems that it's facing, is not really good at. Overall, my impression about how things stand at the moment is that I wouldn't really recommend to buy the shares just now. So it doesn't just mean that it may be volatile for the upcoming days, but we also have good reasons to expect a significant amount of volatilities coming to its way in the near-term future. If you have an existing position in Mullen, then in this case, I don't think that it's really going to make a difference to liquidate it now. But definitely do not add more to it over the next couple of days. Once it's confirmed that Mullen's going off the Nasdaq, then it may be a good moment to refocus on taking a long position eventually. Regardless of whether you want to buy it now or later, the overall recommendation for the exposure should be between 0.5 to 1% of your portfolio.